what I'd love to do is unpack this first exit. So you had an 8-figure exit and you were 20 something, young
Right.
20s, I think.
Right.
Uh, and so how old were you?
Well, let's see. Sold in 98. So I was 27.
Okay, so imagine being 27 with the most money you've ever had, maybe even more money than you ever thought you would have at any given time the rest of your life. And you do this at such a young age. Now, I've got to imagine, and I know a little bit of the backstory, that there were some financial blunders, some mistakes. I'd love to get into that so people can learn vicariously through you and not make the same mistakes.
Yes. Well, yeah, I tell people a lot. I've been very fortunate because of the 6 exits, which is, unique, that I learned a lot each time and I got better over the years. But yeah, that first exit, I literally did go from 1 bedroom apartment, peanut butter and jelly. At that point, my wife and I, my, now wife, we were new in our sort of marriage. We were married in 96. So we'd been a couple years in marriage. We were making a lot of sacrifices literally to keep our heads above water. We had no money. And the business was growing, but we were using every dollar to hire new talent and grow. And my business partner and I would literally have these meetings where, I mean, they were often like tear soaked meetings. Like, can you make it another couple weeks without getting paid? Because we've got this engineer we want to hire. I mean, we were really, really running tight. Um, and then the next thing you know, we sell the business and you're kind of, liquid 7 figures and you have all this net worth of stock and all these things. And it's like, wow, it didn't even make sense to me. It was literally like a number on a statement that I didn't understand. And I was excited. I was proud. I was happy, all those kind of things. But the two big standout mistakes were one, because I had made my money and been successful in what was effectively a tech startup, I had a enormous concentration because the company that bought us was now public. And so I held this big public security, which was technology oriented and did not diversify really at all. I thought this company is going to go to the moon and that's what the analysts are saying. So why would I sell one share or diversify? And the idea of any other asset class made no sense to me because why would you pick a bond or real estate or something that I don't understand and seems like it gives a lower return? So I basically was heavily concentrated in one security. And then the only other securities I held were also technology stocks because that's what I understood. And so, mistake number one, pre the NASDAQ crash, I was, most of my net worth was tied up in tech stocks. Um, the other mistake is just really not thinking about what I wanted my life to look like. And again, relying on other people, not to blame anyone. I was naive, but I had, stockbrokers and people around me saying, like, I wanted to buy a house, a nice house for my wife and I. And I found this house and it was expensive, certainly by our measures. And I thought about, paying cash for it. And because to me, it was like, hey, I could pay cash. I'd have no mortgage and it would be nice to own a house. And they immediately talked me out of like, that's crazy. Don't ever do that. You have so much net worth, borrow the money. And so I ended up kind of overextending myself because people made it sound like I had such easy access to money that why not get loans for the cars I bought and everything. And now, I mean, which I still don't, do a lot of what I would call, crazy stuff. But if I want an exotic car now, I go out and I pay cash for it. I mean, I'm like, it's my car, it's in my garage. I don't know any money for it. So that was a couple things that when the market shifted, I realized very fast how upside down you can get. And luckily, I didn't have a lot to lose other than the actual, watching my accounts drop really quickly. Um, and I did have cash, but it was a tough lesson to learn. I watched millions disappear really quick out of my control.
And that's a really good point that, you hear this and some of you are watching this and you would say, well, tech stocks are crushing it right now, but they have seasons just like any other stock and there are dips. And if you're over concentrated in one area, you lose net worth fast. And it's not like they rebound immediately. It's not like that net worth comes back. And then the other thing that I think people don't get is that if you lose, let's say that your stock goes to half what it is today, and then you go back to the same number you were over time, you're not at net zero. You have lost money. You've lost net worth. So, let's say the Nasdaq or these tech stocks, they lose all this money, and then it takes 5 or 10 years to get back to where it was. That 5 to 10 years, you're not growing what could have been growing somewhere else. And then in addition to it, when you get back, you've got, 25 or 30% less than what you started with.
So true.